like you and I have talked about, if you have the housing need, don't wait, because housing prices are continuing to go up.
Welcome back to Change in the Market. I'm your host today, Kevin Chamala, and with us is Executive Chairman of the Masiello Group and noted industry luminary and trendsetter, Chris Masiello. Thanks for joining us today.
Hey, Kevin, good to be with you and good to be with everybody in our community, as always.
Yeah, we're hopping right into May, heading into summer here. And based off our discussion last week where we touched on demographics and that's impacting our consumers and the housing market, I think today we want to take that a step further and kind of dive back to what's happening right now, which is always a hot topic in terms of interest rates, inflation, and then we're going to add a little more juice to it and talk about wage growth and how all those pieces fit in together. So with that lead in there, why don't you take us off?
So the outlook for interest rates is probably some modest reductions by the end of the year, but I wouldn't expect too much. For the simple reason is that the U.S. economy, and we've talked about this last few episodes, continues to do really well. You've got a reduction in inflation, right? So inflation peaked a couple of years ago at 9%. Right now, it's about 3.5%. So the consumer's buying power in that regard has gone up. Yes, interest rates have gone up. So, certainly the cost of borrowing, whether it's for, small consumer goods, refrigerators, things like that. Then you get into cars and houses, right? Certainly the cost to borrow has gone up, but also wages have gone up. The wage increases have ranged anywhere on average between 5 to 9%. So when you take a look at it, inflation's come down. Yes, interest rates have gone up, but wages are also going up. And so with the economy kind of running, I don't want to say white hot, that would be an exaggeration, but it's certainly running at a sustainable hot. Right? White hot, typically you're going to burn out, right? But we're running at a very sustainable pace. And the kind of the witchcraft to that is how do you keep the economy running at a sustainable pace, unemployment low, which we have, wage growth, which we have, and keep inflation low, which we have. So there's this kind of soup here that we're creating that all in all isn't bad. I think, unfortunately, like we all got used to 3% interest rates. So not being a math whiz, right? 6 is 2 times 3, so it doesn't feel good.
Right.
But on balance, though, right, we have wages going up and cost of consumer goods going down, and this isn't a bad place to be. And like you and I have talked about, it just, if you have the housing need, don't wait, because housing prices are continuing to go up modestly, 4 or 5% a year. So.
Yeah, and I found, that's a great point. I found that in conversations, again, over I guess the last couple of years, let's just say post-pandemic, right? It's hard to level set that expectation with people who've never been there in terms of interest rates, right? It's hard to get them to understand how good this still is. Closed a deal yesterday and we were talking with the agent and they remember days when, their first house was 14%. Right? So.
Well, sure. I remember when interest rates were 19%. And I actually entered the industry when I was 19 years old. So, so yes, I remember all that.
Yeah. So, and it's hard to, for people who don't have that experience, right? Or who haven't been in this position before in different capacities to get them to understand that it's still a really good spot, right? And so I just come down to, as we've talked about in the past, right? Like you just mentioned, if you have the housing need and you are in the great situation, right, with the wage growth and, the economy is sustainable like we are right now, it's just about being creative.
Yeah, and we're in so like sitting around the table listening to your parents, your grandparents, your aunts and uncles about their housing experiences, right? You have to forget all of that, right? Because we're in an entirely different time. So the fact that we have interest rates that have gone up, short inventory. Typically when interest rates go up, housing prices, either stagnate or go down. Well, we don't have that. And so we're in an entirely different economic cycle, and you really can't borrow much from the past and move it forward into where we are.
Right.
And so, kind of a soft prediction. Rates are going to be kind of where they are for the next 6 to 12 months. They'll start to edge down. We might get a rate cut by the end of the year. It's possible. I think a real win would be 2 rate cuts. I think 1 is probably more likely. All just depends on what we get from mostly employment data and how the economy is doing, right? In employment data, wage growth and employment and unemployment, right now are really kind of the factors that are really affecting inflation. So, we might get 1 or 2 mild rate cuts, but a rate cut's going to be, quarter of a point. So it's not going to move the market a lot. 2 would be half a point. They'll start to come down towards, as we get into next year. I think it's too early to predict what that would look like, but it would be easy to predict a few things, right? We'll get some easing in rates. There's not much outside of a geopolitical event that will affect the U.S. economy. It should be fine. And housing prices will continue to go up. Call it, for simple math, 5% a year.
Yep.
And after that, it really gets down to, what are your needs? Because this has become a pretty predictable environment that way.
Right. Yeah. And I think the one, I wouldn't say variable, right, but the one thing that, and you can disagree with me, and please do so, but I think the one thing that we kind of have a clear sight on that's been pretty consistent is that housing prices aren't going down.
They're not going down. Now look, there's always Uncle Joe that's around, not to pick on any Uncle Joes out there, but just randomly, right? There's always, Uncle Joe that's, I remember when interest rates went up and housing prices went down. Now, Uncle Joe's right.
Yep.
But that's not the environment we have.
Exactly.
Again, as we've talked about, the demographics, we've got a really good understanding, I think, in this community about our demographics are really driving the housing cycle. Certainly inventory, right, with a 10 to 15 year low in new home construction, balance that with expanded demographics, people that need housing, and these are entirely new dynamics, and so you can't there are no conditions under which you can compare this current cycle to any other cycle, or again, I refer to it as a reset, but this period of time to any other. And I think we do know this. We know the U.S. economy will be fine. Inflation, for the time being at least, seems to be under control. Housing prices are going to continue to go up, and employment and wage growth are going to continue to be strong.
Yep.
Pretty good.
I mean, yeah, there's not much. Everything get better, right? But it's pretty dang good right now.
Right, it's pretty good. I mean, the cherry, right? The cherry on the dessert would be, back down to 3% interest rates, but then again, my unicorn ranch is doing pretty well. So. Yeah.
Exactly. So I think it's a great way to kind of button up this conversation. But why don't you close us out with any points you want left with our viewers? Yeah,
I think that's it. Really, when you take into account just everything we just talked about, we're really in again, there's always something geopolitical that could go sideways. That's always a wild card. It's a wild card no matter what on any given day of the week. However, based on what we currently know, these are pretty stable conditions and fairly predictable. So if you got to make a move, or you're ready to make a move, you're making that move, under pretty defined circumstances, which you can't really ask more than that.
No, couldn't have said it better. And I think on that we'll wrap up. And we're excited for taking a different angle to this conversation in the coming weeks by adding in other interesting facts of the housing market, right? There's a lot of, it's the most complicated transaction out there. So there's definitely other parties that could bring some insight to this, such as title, mortgage, etc. So excited to bring you more of those conversations in these meetings. Please definitely, we've had some really great episodes over the last few weeks. a couple part ones, part twos that we definitely recommend you check out. The episode last week on demographics was great. I think this is a great episode to lead into the upcoming summer market. So please share, subscribe, like, comment, and we'll see you next week for another episode of Change the Market.
Great. Thanks, Kevin. Take care, everybody.